I'm about to show you now, I'm about to show you the real most important things that you actually must be looking at every time when you're analyzing the markets. After this particular sessions that we're going to be doing, obviously there are going to be more because I believe each and every single pair that I mentioned, the US 30 Nasdaq, gold, GU, and whatever, they're going to take a lot of time because I'll be explaining to the call. So after this session, you come to a realization that there are things about the markets that once you start knowing, you you realize that the majority of the garbage that you're being told, it's not even necessary for you to know where the market is going, know where the market is coming from, know when to enter or know when to exit. There are so many other things. It even applies to real life. There are so many things about life that once you now know and understand, everything else that was a lie, it becomes noise. So what I'll show you in this particular session is something that once you learn, you understand, and you master, you realize that there's no move that will ever happen on the market that will come without your awareness, or that will ever happen without you knowing what's happening. There are people right now that are trading from a victim perspective. When you're trading from a victim perspective, you are you are a victim of all the manipulations that are happening on the market. You're a victim of whatever that institutions desire to do to any retail trader. You're also a victim of them. So when you rise now in terms of knowledge and understanding, where you start to also understand what they understand, the institutions, you realize that you jump from you skip the level of being a victim trader, then you rise to a higher level, which is not a victim trader. So you get to understand that most of those things that you have been told, most of them, the majority, they were just shallow. I don't really want to say lies. I don't like using the term lies, but they were basically shallow knowledge, shallow information that had a lot of miss, a lot of missing information to it, a lot of missing truth to it. So here, I just want to go even as far as down here so that I can even explain most of the points fully. Right. So here, this is US 30. This is US 30, as you can see. So here, this is the monthly time frame, right? I'm going to start, obviously, there. That's where we start the monthly, the weekly, daily, 4 hours. That's where our main structures, that's where you actually draw your main structures. When you go to lower time frames there, all you'll be doing there, you see, you are simply trying to identify setups that are within your major setup that you would have seen on a higher time frame, right? You're basically trying to identify what you call intraday setups. Remember, once you have figured out your monthly, weekly, or daily bias, whatever, daily direction and daily setups and whatever, the main major setup, once you have the major setup, the purpose of going to lower time frames is so as to identify and plot minor setups, right? So having said that and having known that, if you go to the monthly like this was, most of you here were not even aware that forex trading exists. This was around 2000, and if you check here, this is March 2003, 2004. But one honest truth that I can tell you now is that the nature in which the markets move, it has never changed. The principles which govern or which institutions use to move price on the markets, they have never changed. What has changed, what has changed is basically uh, they haven't changed. They've just tweaked some of the, like I think I've been telling most of the students in the class that one of the things that institutions are doing is to tweak is to tweak your understanding of a certain principle. Let's say you know that, let's say after a change of character, the market has to come back and mitigate before it goes, right? That's a basic understanding. So they can play around with that knowledge, not violating it, but play around with that knowledge. Sometimes they can even prolong a certain move. And then that prolonging, someone might think that they've changed direction or whatever, yet the direction is still the same. So the nature in which markets move, it has never changed ever since. It's like life. People they think there's any new secret to life that is out here that is now available now. There's no secret to there's no like even when it comes to success, people they think there are new secrets that are now being cooked now, whereby there are new secrets that are now present to success now. No, these principles they've been there before even time began, and they are still the same principles of success that were there 100 years ago. They are still the same principles that are still governing even your success today. So the main principles they have never changed. They have never changed. So most of the trade, the problem, the main problem that we're having in the entire trading industry is because unlike our religious organizations whereby you have Christianity, you have Hinduism, whatever, there you know that every religion is a leader, and I in that religion they always have a what you call a guideline. For example, in Christianity, they have the Bible. The whole Bible is the guideline, right? Other religions, they have different things, right? So all of that, those are things that are guiding them in order for them to prosper in whatever that they are doing there. The problem that you're having in the trading space is that there is no major guideline to say this is it. You will realize that most of your guys, most of your mentors, most of your mentors that are calling themselves mentors, they are people that are learning. They are even still learning about some of these things. So it's a dangerous thing now to be part of such a group like that, because at the end of the day, I always tell people don't be a part of a community, or don't be under someone who will tell you that they there are no mysteries, or there are no mysteries in trading. Mysteries is just a deeper understanding of a subject, right? They are there. If you hear someone who tell you that there is no mystery when it comes to trading, that person is a problem at the end of the day, because they have already blocked the aspect of knowledge, and they have already given you that um idea that beyond what they know, they're telling you there's nothing else, which is a wrong impression. So if you were looking at the market from the monthly, you would basically see that they were bullish, 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 bullish here. I'll go to the daily just now so that you see how you could have been taking trades, just having this idea, just seeing whatever the monthly was doing like that. So let me go to the weekly first before I go to the daily. Weekly, okay. So looking at the weekly, you will see that the market was basically pushing to the upside. The same things that I'm telling you today in 2020, 2004, the same principles were being applied on the markets. The same principles. Nothing ever changed. People who tell you that the market has changed, it's not, there's nothing that has, what has changed is their awareness of what is happening on the market is the one that is rising. Their awareness is the one now that is now rising. The markets, they've never changed. They have never changed. So there, you can see that the market was basically bullish, right? So when you now go to your lower time frames now, you align setups in line with that bullish momentum. You align your setups in line with that bullish momentum. That's the whole major purpose of going to lower time frames. So here you can see we were bullish, 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 bullish. They were pushing to the upside, strongly bullish as they were breaking structures to the upside like that. So you realize now that if ever the market came, let's say, to a level like this, which is an extreme demand, right? If they come to this demand like this, when you go down to daily H4, H1, you're just going there to identify a shift here. Once you see that shift, you enter the trade. Once you enter that trade, your TP is not based on that lower time frame. If you base your TP based on a lower time frame, in as much as it will be hit, but you sabotage yourself of a huge chunk of the move that the market, because remember, where you did your major analysis here was here. So according to this, once you enter here, you're supposed to exit there. So once you get that lower time frame confirmation here on the zone, that trade you can even hold it even beyond the lower time frame targets, because the lower time frame targets are just lower time frame targets, right? They they can be hit, definitely they can be hit, but at the end of the day, the most important question that you must always ask yourself is, how much more money am I leaving on the table? I always laugh with some of the guys that I trade with, whereby I see them celebrating TP's hit on a 5 minute time frame. In as much as it's good, there's nothing wrong with that. There's nothing wrong with that. But one question that I always ask them is, how much more money did you leave on the table? Yes, I can see how much money you took from the market, right? We can see how much money you took from the market, but how much more did you leave on the table? That's the most important question that you must always ask yourself, especially when it comes to the market. So here on the weekly, on the daily, I actually, you see that here, this is a weekly zone. This is a weekly zone that they tapped. And here on the daily, someone could have drawn this level here, but this on the daily, it's sort of like this one was tapped already. It seems like this one was tapped. They broke out, then they tapped. So there was no need for them to come all the way down there. Even this fair value gap, they didn't come touch it, which is not a problem. So the main purpose of you going to the higher time frames and drawing those major zones on the higher time frames, it can even help you to not miss certain moves. So here they tapped here, they didn't touch all the way here. Someone could have drawn this, say, hey, I'm waiting for this. It didn't come. Someone could have drawn this, say, I'm waiting for this. It didn't come. That's not, it's not a problem that they didn't touch there. It's not even an issue, because they can always touch wherever they want to touch. They can always leave out certain zones and whatever. The most important thing that I always tell even the guys that are in class is that I can even remove all these zones. I can even remove my supply and demand. I can still be able to take trades successfully. I can remove all these lines that you're seeing. I can take trades successfully. The reason why I'm doing this so that you can actually understand what I'm trying to explain. So here, according to the daily now, here, that's where you're supposed to take your trades using your lower time frame. Lower time frame I'm referring to, that's where you now go to your H1, M30, M15. You're just going there to identify the shift that happened there on this zone. Once you see the market structure shift on that zone, you enter that trade. Um, once you enter that trade, then you hold it further now according to the higher time frame targets. What type of US 30 prices are different? Uh this is the US 30, the main US 30. The main US 30. This is the main US 30. Prices are different, but the difference is not like, it's not a big difference even if you say the prices are different. So I'm looking at whichever US that you open, the analysis will be the same and whatever. So once you have the analysis and everything, it's not even a problem that the prices are different. Sometimes I don't even look at these prices whenever I'm trading. I don't look at all this. I'm looking at the movement here. That's the most important thing. So here, looking at the daily, when they did this upside shift, now that was a confirmation that we are fully going up. But that shift also, you on a lower time frame, it would have actually been seen exactly here. Let me see if the 8 hour or the 4 hour can go as far as there. This is the 8 hour. It's not appearing nice, but it's also okay. Let me see. Let me try the 4 hour. So these higher time frames, that's where your major analysis, it must always be found. Even if you you say you want to scalp, you scalp with an understanding of where the market is going overall. So let's say even if you wanted to scalp, and I'm not even scalping, I'm not even in agreement with it, because at the end of the day, you're leaving a lot of money on the table. So, for example, this move, right, based on what we are analyzing, we are seeing that we're coming from here up until we take out that leg up there. Imagine this is from April 2005 up until uh, January 2006. That's like close to, it's more than 6 months, right? Of just one order flow, the market pushing in one order flow or one direction. Let me tell you the real secret that you don't understand about institutions. Institutions, they move price based on order flow. They can move price in bearish order flow for 1 month, 2 months, 3 months, 4 months. Even they can even push the whole year, pushing in one order flow. And you now, as a retail trader with limited understanding, you might think that there are so many moves that are happening on a lower time frame. But those, if you analyze those so many moves that you might be seeing on a lower time frame, you realize that all of them, they would be gravitating towards one order flow. All the noises that people say, there's too much noise on the lower time frame, blah blah blah, etc. All those noises, there will be noises that will be gravitating towards a certain direction. It's not just a noise that is haphazard. It will be gravitating towards a certain direction. So yeah, coming here on this level, that was a daily level, a daily confirmation, right? But you don't have to wait for that, right? Once we tap our zone like this, right? We tapped our major zone like this, and that zone, remember, I showed you a rate on the weekly time frame. So here, looking at a simple 4-hour structure, which is also a solid structure. Here, this is that's our shift there. So that shift there on the 4-hour, if you notice, as it was coming down from up there, right? As it was coming down from up there, one thing that you will realize is that let me do this. Ta, 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 ta. You realize that they never induced as they were coming here. They kept on maintaining the same internal structure, if you notice. Same internal structure, bearish, bearish, bearish. There's also a way you can be taking trades using this knowledge. Just applying this knowledge, this drawing that I just did here, you can actually make a lot of money just from here, knowing that I broke here. I now have this as my internal lower high, my internal lower low. So if you break here, do a small pullback here, I can even sell here. My stop loss above here, right? Break there, stop. I can sell here, stop loss above there. We come here, create this new low, lower high, lower low. Here I can even add many trades here because the zones are too close to each other. Lower low, pull back there, lower high. I can even add more sales. The stop loss just here. So there are so many trades there that you could have, even here when they came here, they failed to take this level out. So here, all of this was just unnecessary noise. So here, you could have even taken sales there. Here, after the break, came back to the extreme, you could have taken more sales there. Here, even before the break, came back to the extreme, you could have taken more sales there. So they came up until eventually they did what they've never been doing. They broke the cycle. So the break of the cycle, it tells you that we're now going up. Those solid confirmations like those are moments you can even go aggressive. That's a solid confirmation, especially when it's on a higher time from like your 4-hour. It's a solid, pure solid confirmation. So there, that was where an aggressive entry could have been taken. Why? Because remember, overall order flow is what? Bullish. Overall order flow is bullish. Basically, what do I mean is externally we are bullish. That's a swing higher low, swing higher high is that one. This one is now a swing higher low, right? So it means externally we are bullish, and now internally we have also turned bullish here. So both when external and internal they're now bullish like that, then they present to you the opportunity like that. So this was the shift here. After the shift, you don't just enter immediately, right? Unless your account is now reached at least let's say 10,000, 50,000, 100,000 up there. Those are moments where, even after this, right? That's if you want to trade like that, right? Whereby you can even buy, your stop loss is just here. You can experience the drawdown, obviously, yes. But I'm talking with someone at a higher level, whereby you're not trading maybe $10,000, $50,000, $100,000, even $1 million. You can even afford to enter a trade immediately after this. That's a higher level of trading. Now you don't need sometimes so, but now at your level now, the most important thing that you must master is accuracy. So here, accuracy, and the purpose of accuracy is so that you minimize drawdown. So here, that was where the aggressive entry could have been entered. If I even decide to refine this, it was actually around here, like this. That was where our high probability buy. It's a high probability. That's an A plus setup. When you say A plus setup, this is an A plus setup. When your internal order flow is now in alignment with your external order flow. So here, entering there, my overall target, right? Obviously, by the time they get here, right, someone might be thinking of coming out. That's why I said the lower time frame targets, they are okay. But at the end of the day, you must also realize that there's a huge move that will also be, that is still there before the market even goes all the way, all the way to the real major target, which is up there. If you notice, it took almost close to from April, May, June, July, August, September, October, November, December, January, 9 months, 9 good months, 9 good months to get to that TP. So order flow was bullish now. They turned bullish here. Then obviously the daily confirmed there, right? The 4 hour confirmation did its pullback. We entered. Daily confirmation, this was the pullback of the daily confirmation. But I want you to listen now. The, the daily confirmation, which is, let me go back to the daily. Notice something here. Notice something here. This is an H4 confirmation, and we entered here. That's a daily confirmation. It also encountered its pullback. Both of the confirmations, they don't contradict each other based on order flow. Order flow is still maintained to the direction where it was going. If order flow was a 10 bullish here, even when the daily confirms there, it will still remain bullish. So yeah, even after this daily confirmation, they came back to the extreme, which was where you could have entered again buys. So yeah, they had a lot of structures. If I'm just going to summarize the structures on the daily, that was an internal break like this, an internal break. Then the next break was here. They were now bullish now. So all those structures you'll find on a lower time frame during this 9 months, during this whole 9 months, uh, at the back of the institution's mind, these guys they just know that we are pushing in one direction. From April, this was May up until January 2006. That's when the major TP was hit. That's where we now also have what we call positional traders. Positional traders, they can hold the trades for months and even up to a year of holding trades. So that's a higher level of trading now because you are aware of the idea of order flow and all that. I always also recommend people to have different accounts. You can have 2 or 3 different accounts. These 3 different accounts, you can have one account where you are trading based on the overall order flow of institutions, whereby if the institutions are entering here, you also exit where they are going to exit. You can have an account like that where you just want to exercise your knowledge and maximize on the knowledge that you now have of the markets. You can have an account like that where you can hold trades for that long, right? Then you can have the second account, which you what we basically call maybe a day-to-day account where you are trading it daily, right? Approaching it on a day-to-day basis. You can even hold trades for a few days and few weeks, whatever, right? You can have that one as well. Then the last one now, that one, you can have that one not really for the purpose of holding trades for this huge long, but that one you can even use it. I always say you can even have what we call an aggression account. An aggression account is where, for example, when you get such A plus setups like those, you can even go aggressive. By the time the market comes to this lower time frame TP, you can even exit. Then when they give you another opportunity, so that one you are taking advantage of all the opportunities that are within the major move. Unlike the first major account where you can even enter just there, anticipating the market just come there without you adding more trades or whatever. So that one now you are taking advantage. Once we come here with TTP, we come back, you enter again, GTP, come back, you enter again, ET. So that one you can also, so when you have different accounts like that, it's easier even to flow with it. It's easier to even flow with it. So going back to what I was saying on the 4 hour, the principles have never changed. Hear me. If you hear someone who will tell you that the markets have changed, the markets have changed, nothing. The markets have never changed. The markets will never change. People's perspective of the markets are the ones that are changing, not the markets. People's perspective, people's eyes are now opening up. That's why they now think, hey, things are now changing. Nothing has changed. it's like someone who didn't understand when you were living in darkness and you didn't understand some of the laws of success, you would think that um you will literally think that maybe there's you literally think maybe there's now something that has changed, or that it's just that you are now aware. You are now just aware of things that you're not aware of. So yeah, they came back all the way. They did induce there. That was that was an inducement. So yeah, according to marking structure, that was your leg. Um, Let me mark the other previous legs. Previous leg. That was a previous leg. So here we now had an internal higher high up there. Then we now have an higher low right here. So even here, as they were going, they were even flowing in bullish order flow as they were coming all the way to hit that level up there. So all of those were still also opportunities to scale in. So here, first trade, even here it came to TP, went all the way, did whatever it did. Um, Let me put it nicely here. Let me do this. We do the correct thing like this. It's a break. Right. So this is basically the order flow that was now being followed. It's actually here. This one is actually here like this. Right. It's actually like this. It's actually like this. Then here, it's actually here. It was like this. That was the previous. That was the yeah. It's actually like this. So it's actually like this. Then here they are now bullish. You can see higher high, higher low. That was a new higher high. This was a new higher low. They came to the extreme of this one. So here, this is also an A plus setup and a high probability entry opportunity there. So when they tap into that, into your zone, like 4 hour zone like that, you can even go to 15 minutes. You are going there not for analysis. You are going there just to identify that shift. Once you see that shift, you strike, you enter the trade. That's all you're going for. Sometimes even some of us, we have matured to the extent that we don't even need to go there to even confirm that are we going up or down. We know that we are going up. So there's no need for me to even go down there to confirm what I know I'm going up. So here they now this was now a continuation of bullish order flow. Continuation, they induced there, they came back to the extreme. One thing that is so good about coming to the extreme, those are high probability entries, because when they come to an extreme level like that, there's no other level that is beyond that. So definitely the market will just fly from there. So here they were now pushing up. They are, if you notice, they maintained this. So on a lower time frame, imagine on a lower time frame, you are seeing a lot of movements here. But when you have understanding, you realize that there are not even a lot of movements. The market, for example, here, if we were to compare, let me also show you one thing also, as they were picking momentum. How do you also know that they're picking momentum? When they prolong, or the length of the cycle increases. For example, here, if you notice from here to here, this was a shorter cycle, right? Then from here to here, okay, it was bigger than this, okay, longer than this, I mean. Then from there, the next one, you see that it was actually longer than this one. So here, this one, if you compare this to this this one is longer than this one. Then this one, the next one, was longer than this one. Then even the pullback is also longer than this pullback. Then the push is also longer than the push. So this is just a gain of momentum that was happening there. It's actually a gain of momentum. That's how you identify that the market is now gaining momentum. They even prolong these moves. So this prolonging, a lot of retail traders will be so confused. Hey, what is USDT doing now? Hey, this thing is confusing us. Is it going up or down? Yet, the overall, you realize that overall they were pushing up, right? They were pushing up. Overall, the order flow was to the upside. Overall, the order flow was to the upside. So the major trades there were buys. There is also a way you can enter sales. right? But that's not really the major important thing. Once you master the art of entering trades that are in line with order flow, that's where your money is. These counter trades, in as much as they can be entered, yes, they can be entered. There's nothing wrong with entering counter trades. But the main point is you having mastered how to enter trades that are following order flow, you realize that even if you just choose to focus on that, you realize that you can actually make more money than someone who is trying to attempt to take counter trades. So yeah, that's a counter trade where you would have even entered sales to the downside, obviously with confirmations, and into this extreme, right? Into this extreme. That's one of the abilities that you must have whenever you're trading a counter is knowing how far that counter is going to go to. That's an ability that you need to have whenever you're trading a counter. Not only how far is order flow when we maintain a bullish or bearish, is order flow when we maintain. I don't understand. I don't know. Can you rephrase your English there? Rephrase your English. I am not understanding your question properly. So here you could have taken a counter, right? But that's not the real major important thing. That's not the real major important. The real major important thing is for you to make sure that trades A plus setups you are catching them. I always tell some of my students that are now so deep in terms of also understanding that there's nothing wrong with missing a minor move, but there's everything wrong with missing a major move. A major move is a move that both internal and external order flow is bullish. So that's an A plus setup, right? Obviously. So when you miss those setups now that are in line with order flow, there is a problem now. When we maintain bullish or bearish move, is that order flow? Yes, what we call order flow. This is order flow. Order flow. We are bullish here. We are still bullish here. There's nothing, there's no change here. There is no change here. We are still bullish. This is still a bullish market. No matter how many drops you are seeing inside here, the bullish market was still maintained. So once you master the art of maximize on these setups and maximize on the setups and these trades that are in line with order flow, you will make a lot of money there. You will make a lot of money there more than someone who is trying to enter counters. In as much as you can enter a counter, obviously there are moments where even counter trades are worth taking depending on the time frame, obviously. But when we are looking at a time frame like this, you can see overall we are pushing up. So there are moments where you might not even need to trade. So here you took this trade, went successfully. Second, went successfully. Third, went successfully. Even if you are using that idea whereby you just come from here, we hit this major, or those that are in the class now, you are aware of the fact that even here, even if you, okay, let's say you wanted to maximize on every move, you would have done this. After you enter here, right? We induced, came back to the level, blah blah. So when we when we start moving up like this, even here after breaking, I can even buy stop loss below here, higher high, higher low. Where is my new higher high? It's roughly here, higher high, higher low. So they will maintain this up until they finish creating this. So you can even hold this buy that you entered here. You can even hold it as far as that inducement that I showed you up there is concerned. So when they now induce there, you can even decide to come out. Even here, they were now giving signs that they are, especially when they failed to create a new higher high. That was also another sign that they are most probably going to now pull back. So when they are now doing that, you can even decide to come out, of which it was a from the 15th of May to almost 22 June. That's almost a month of you holding this buy, right? Which is okay. So you could have came out, obviously, when they induced to the downside, blah, blah. They obviously, so you might realize that there might not even be any need for you to take these cells, these counter cells. Then you wait for the next year. That was also another one. You take again trades there. You hold as far as the inducement is concerned to the downside. If they don't induce, You keep on holding and holding. Once you see them inducing, or once they're giving you signs that they're about to induce. So here they came, failed to induce, broke here, came here, failed to induce, so you were still inside, even from this was 7 July up until where did they eventually induce? 5 August. Imagine. So you realize that most of these trades, they are pushing in one direction. For one good month, you're holding this buy successfully. For the next other month, you're holding this other one successfully. Even when they come back here, you're holding this trade also from around 13 October. Even if you use this, if you go beyond this and you want to use the idea that I'm telling you, you just follow order flow up until where they induce. So if you are using that idea, it means you would have held this as far as let's go up, down, up, down, up, down, up, down. We're still going up. So this it's still once you enter there and they just so most people they even wonder, how do I know that it's now time to shift stop loss to entry? It's all calculated. Here, when we for example, here, when they went up, came down like this to this level, and you buy either here or here. When they come and break this level like this, you can even shift this stop loss of this entry to break even like this, right? So most of the times they don't even usually come back all the way down there. The time that they usually come back is when they are still within the year they were still within this leg. They failed to break here, they're still within this leg, they came back again, right? So here you can shift stop loss to break even. You are now holding based on this. So even as you're holding based on that, you can even shift lock profits on these higher lows once they are confirmed. For example, here once they break there, you can even lock profits there. Internal higher low, they break, you lock profits below there up until where they are going to shift. So here they went up, down, up, down, up, down. Where was my? So roughly there, that's where they did the shift. So around there, that's where you're now exiting the trade from the 28th of October up until the 28th of November. One full good month of holding a trade successfully. Once you successfully manage to harness what I'm telling you now, you realize that you can even decide and make a decision to say, I might not need to trade. There is a way to trade counter trades, yes. But once you have been catching these trades that are in line with order flow, you might not even need to trade this counter. You realize that you might not even need to, because you would have made good money here 1 month, 1 month of holding good money, 1 month of holding good money, another month of holding good money. Then here the last move, because here they didn't break, they gave you the last move. So you after inducing, they came down, to around these levels here. Then they did the shift inside there. Obviously, that one you could have caught it using the 15-minute, 30-minute shift on that zone. Once you see the zone, they tap the zone, you go to your lower time frame, you see the shift, then you enter. Your TP was just here. You can even hold it as far as that internal structure is concerned. High, low, high, low, high, low. Then here, when they do